Hello traders, this is Blake Morrow and you are listening to the week ahead video for April 5th, 2020. I hope you guys are having a safe and healthy and good weekend under the circumstances. I know it's tough for everybody, but tough for some people more so than others, especially if you are personally being affected by the coronavirus. I just want to say I hope you guys are staying home, staying safe. But the show will go on. I wanted to make sure that we did get you out your weekly look at the FX market. So I'm glad that you guys are listening in. Before I get started, I have to mention that if you haven't tried out ForexAnalytix, this is the perfect time to do so because it's only $1. It's $1 to try us out. It's $1 for 10 days. It doesn't matter what version you want, whether it's the premium or the light version. Okay, you're going to get to try the premium version for the next 10 days. And when you do so, make sure you download the mobile app. That's number one. No matter if you're on a Samsung device or using an Apple device or or it doesn't matter which platform, just download the mobile app. And then from there, make sure you go to our webpage, log in, and jump over to our chat room. Our chat room is located right here next to your icon where your name is at, and chat with us. At least for the next 10 days, and be active in the chat rooms because that's where we're all at. I want to real quick before I go into the charts and go into what's happening this next week. We got a lot of questions regarding our patterns in play. So let me explain to you what these are. You can see that we have active patterns in play, and then we have closed patterns in play. And I get asked all the time, do you guys just tell us when to buy or sell? And the answer to that question is no, we don't. What a pattern in play is basically a pattern that is developed based on one of the analyses that we follow, whether it's basic technical analysis or harmonic trading or or Elliott wave counts, and you can see the different patterns that have developed. We try to be as close to the book as possible, by the book as possible, and we the way they close or they invalidate or they hit the targets, is based on what we would expect based on the expectations of that pattern. And it's very realistic because everything is recorded in real time. They're executed in real time. And it will, you can see all of the numbers, the total amounts of winning patterns in play, losing patterns in play. And you can go back from the history of when we started and see every pattern in play. You can go back and look at the chart and on your own and say, okay, they got in here, they sold here, and this is the reason why. And you can go through it all. This is all recorded, and you can see we've done 880 patterns in play since our existence. So the question that to go back to answering that question is, well, do we give you buy or sell recommendations? No, the patterns in play should be more of a bias. Like, for example, the euro pound hit the 618 retracement, and it's been bouncing. So if you go back to this last week and you can read the analysis and go, well, why? It's because we hit the breakout point 200 day moving average 618 retracement, and it's bouncing from those levels. And knowing that there's a long pattern in play based on all that information, it might be able to help you with your bias as far as being long the pound is probably a better bet than being short the pound. And here's the reasons why. That doesn't mean, it's like for me, just so you guys know, I happen to be long the euro sterling or the euro pound. I've played it on the long side a couple of different times over the last couple of days of trading, and I've been adding taking profits, adding back on dips. So there's different ways to play it, but that should help answer those questions for you guys on patterns and plays, and hopefully give you a little bit better explanation of what they are. Now, I wanted to explain that just because we've had a few questions from a lot of new traders that have joined the ForexAnalytix community, because we did offer over the last couple of weeks an offer that was unprecedented, but based on the volatility that we've seen in the markets. There's a lot of people saying, "Hey, I want to join, ForexAnalytix." So what we did is we just offered a pretty steep discount for a couple of weeks. But now that that's over, I've had a lot of questions, so I wanted to address that. Now let's get into the charts and let's talk about what's happening this next week. First and foremost, we do have the RBA that's meeting this next week, and so we'll look at the Australian dollar, and we do have the ECB meeting minutes. We also have, everybody's watching unemployment claims in the US and in Canada actually on Thursday. So that's going to be some pretty important data. And I'm not so sure the inflation data on Friday in the US is going to be watched that closely at this stage. So I think what most people are watching is the S&P. So I want to spend a little bit of time talking about the S&P, the dollar yen, the euro, the Aussie, and the cable. All right, so let's start off with the elephant in the room with the S&P, and you'll notice that these charts actually have nothing on them minus our normal indicators. You'll also notice that we actually had a death cross, a death cross on the S&P developing. Now, most of you would say, well, duh, after selling off so aggressively. It's when the 50-day moving average crosses the 200-day moving average. It's something to be aware of. It's and I believe that the downside pressure is going to stay on the equity markets as long as we stay below this 38% retracement. So when you ask, well, 38% retracement, what do you mean by that? That is going to be that fib level right here at the 2645 level. Basically, as long as we stay below that 38% retracement, I do expect the downside pressure in the equity markets to be there. You can also notice that we've consolidated a lot, and we spent really all of last week just consolidating at these levels. Now, what I'd be looking for specifically to see if the S&P is going to really get moving is this 2400 level. You can see it's a 50% retracement. Okay, and let me grab this horizontal ray here. 50% retracement, spike low, a lot of horizontal support through here. You can see it all right through here. As long as we're above that 2400 level, I wouldn't expect, I think it's going to be choppy. We get back below 2400 and we're probably going to revisit these lows here. One of the things that I do want to mention regarding the S&P is the retracement has only been a 38% retracement. Okay. So when you get only a 38% retracement of a move, that tends to lead us to believe that this is going to be a continuation pattern. Okay, which means that more than likely the S&P is going to roll over and we're going to continue lower from here because it's been such a shallow retracement. When you only have a 38% retracement, fib retracement, it's so shallow that you tend to have a continuation. Now, I want to say realistically, normally the way I would gauge something like this is I would say, okay, well, we have a pennant, and that means that the pennant should continue, and we're going to trade down to 1500. I'm trying to be realistic here. I don't know if we're going to see 1400 in the S&P. I would be very, very surprised if the market saw those levels in the coming months ahead. But maybe I'm wrong here. What I do expect actually is that the stock market will revisit somewhere between this somewhere in this consolidation area between 1800 and 2000. I think this is a realistic expectation that we take out new lows and revisit somewhere down here. But how far we go is more based on how long this virus persists at the rate that it is. And I do believe that below new lows will, when we went down towards 2200 here, if we hit new lows, it's going to trigger some selling, probably enough to get us down towards somewhere in this support. I do think that you could get a tradable bounce from here. Whether we completely recover or we just consolidate down here has probably more to do with how the economy bounces back in the fall versus anything else. So, but that's kind of what I'm expecting with the S&P. Now, the question that you might ask is, well, how's the FX market going to respond to that? And frankly, if you look at like the US dollar, Japanese yen, what you're going to notice here is, and let's not ignore the fact that the US dollar, Japanese yen did an absolute number on people over the course of the last several months, because we had this breakout that happened above 111. And this is a bunch of official buying, a lot of yen selling, and then the virus took hold. Markets came under pressure. Dollar yen, sold off. Then the dollar came into demand. Dollar yen rallied, almost, but could not take out the highs. So now here we are consolidating. I actually think that the dollar yen will let me compare that to I think the dollar yen will start tracking a little closer to here. This is the dollar yen here, okay, and the S&P is this line chart. I think you're going to start to see the dollar yen correlate stronger to the S&P. So depending on what happens with the S&P, I think that's what's going to happen with the dollar yen. So let's say my assumption is correct that the S&P is going to eventually break through 2400. That would mean to me that the dollar yen is going to eventually take out this support through here. So I look at the dollar yen at current levels and think that this support is going to be rather important, and so therefore rallies now should be capped somewhere in this 109 and a quarter to 109.40 range. So if the dollar yen sometime early this next week trades up to those levels, I think that this area right here is going to be a better area to be on the short side of the dollar yen for an eventual break back below 107. So that's kind of what I'm looking at with the dollar yen. Now, as far as the euro goes, I do believe that the euro is directionless, and the euro, like its other dollar counterparts, has done quite a big number on a lot of different people, because we've had this massive false breakout up here, okay, massive false breakdown here, and now let me get rid of this really quick. I just kind of wanted to point that out. And you notice I've started with clean charts today, just to give you guys, this way you can kind of see how I view things. I think the euro dollar is probably going to find some support down here at the 107.50, which is a 78% retracement. So being on the short side of the euro right here, especially with all this support down here being, in my opinion, relatively important, I think we're going to be more range bound than anything. So I think, looking to sell the euro dollar, maybe back up towards 109.50 to 110, and being a buyer down here around 107.50, 108 level. I think trading inside of this range this week is going to be probably the way to go until we find more of a reason why the dollar is moving. Because what you're seeing here with the euro is more dollar related, less euro related, because of what the Fed has done, what the current U.S. administration is doing fiscally. It's weighing on the dollar, but at the same time, the dollar itself is in demand against a lot of different other currencies because of the risk off that we're feeling in equity markets. There's still that underlying dollar demand. So I think the dollar is just being pulled in two different directions, which makes it a little bit more challenging to trade the euro. That's why I've been focusing a lot on cross rates versus dollar pairs. But that doesn't mean that there isn't good opportunities in the dollar pairs, because if you look at the Aussie, now keeping in mind that regarding the Australian dollar, we do have the RBA this week, right? So if you take this high from where the sell-off started to the low, the Aussie basically came within striking distance of the 618 retracement. So you can see this big resistance that came in through here. Okay. The Aussie dollar also just came out of an ascending wedge, which should keep the downside pressure on the Aussie, this week. And if you look at how, like, some of the emerging market currencies like the Turkish lira, or the Mexican peso, or the rand, the Canadian, which is not a emerging market currency, but commodity currencies and emerging market currencies are acting very similar. As long as those stay weak, that means the Aussie is probably going to stay relatively weak as well. So the 50% retracement comes in at this spike low, which is 58.60 roughly, and then below that it's going to be about 58 cents. So I think that the Aussie dollar will probably see these levels and may find a tradable bottom down there as well. Kiwi is very similar. You can pretty much draw the same conclusion with the Kiwi, as far as the same setup as the Aussie. We also came out of an ascending wedge, which should keep some downside pressure, and you can see the Aussie or the Kiwi also hit what I think is very key resistance between that spike low, the highs 618. This should keep us relatively pressured for the Kiwi, and we should probably come down and see some of these levels again. And the last thing I really wanted to talk about is the cable, just because the pound had a really nice recovery, but I give you the buts here. Okay, like the Aussie, like the Kiwi, came within striking distance of the 618 retracement. The problem with this this cable, or the sterling, came out of this wedge this week, Thursday, Friday, and now we're pulling back. So you look at the cable, how low can we go? It's probably somewhere down here. And if you think about it from that Fibonacci standpoint, 50% retracement comes in at 119, 119.40, 119.50. So, those levels look doable. So, the euro, I think, is range bound. I actually think most of these majors are range bound, and so that continued dollar strength that you might see against the euro, going back to the euro, down here towards 107.50, maybe 107 area, or the cable continuing to slide lower, or the Aussie continuing to slide lower, or the New Zealand dollar continuing to slide lower, is probably going to be a result of the equity markets continuing to stay under pressure. So as they stay under pressure, the dollar strength, the dollar acting as a risk off currency, is probably still going to be probably going to be more in demand this week, as we watch equities slide lower. Remember, 2400 in the S&P is going to be really important. There's obviously more happening in the markets than just that, but I wanted to keep this video brief today. So if you found it helpful and you're watching us on YouTube, make sure you give us a thumbs up. That always makes myself and everybody else that's working on this video, doing the editing and posting it on social media, makes us feel good that you guys are enjoying these. So I want to thank you for listening in. And remember, if you want analysis every single day, we offer that analysis for free on the F.A.C.E webinar, which is every single morning. So make sure you, well, not every single morning, Monday through Friday, make sure you come listen in. And my views change throughout the course of the week, as do the rest of my team, so based on what's happening. So make sure you listen into those. And Dale Pinkert, obviously, Forex Stop Hunter, he's our host that really lines up some of the best interviews throughout the course of the week on different traders or analysts or economists. And make sure you subscribe to our YouTube channel. So if you can't listen to those live, you can at least go back and listen to all those interviews that he does, throughout the course of the week. So guys and gals, please stay safe, wash your hands, keep your distance, try to keep 10 feet away from one another. Not your family, obviously, but people that you come in contact with, and just stay safe. So my name is Blake Morrow with ForexAnalytix. I hope you have a great remainder of your Sunday. I'll catch you tomorrow morning on the F.A.C.E webinar. Thanks, everyone.